Well, hello there, friends, and welcome once again to another edition of the 360 Experience podcast. I'm your host, Tim Brahim, and today's episode is going to be unlike any that I've ever done in the sense that I'm bringing in a guest who I don't really know very well. I know him as a Loan Atlas member and a great implementer. His name is Michael Belfor, but this conversation will take a radical turn about 20 or 25 minutes in, whereby I will then coach Michael for the first time. And you'll get an opportunity for us to be totally unscripted and for him to bring a challenge that he's having in his life and his business to the forefront, and for me on the fly to coach him. Not anything I've ever done before. I highly recommend that you listen to this entire episode. I think you're going to get great value from all of it, and in particular, the second half. Now, Michael Belfor is a loan originator in California from American Pacific Mortgage. He is a member of the Loan Atlas, and as I mentioned, he's a tremendous implementer. In February of 2025, he locked in 17 refinances by using a strategy that he learned in the Loan Atlas. You're going to want to pay special attention to that. We're going to talk about not just the strategy, but the prep work necessary to be able to leverage those opportunities when they come to the forefront. And boy, did he ever jump on it and make himself some really, really nice money as a result of it. When we get into the coaching aspect of it, we're going to talk about the nature of his relationships with his realtor partners and how he can have healthy boundaries and better systems with them to make sure that he has the kind of balance in his life and yet remains incredibly successful and productive. So buckle up, get ready to take some notes. I hope you enjoy this episode. Before we get started, thank you for listening. And thank you for those of you that are subscribers to the show. If you're not a subscriber, please go ahead and click on the subscribe button. The more subscribers we have, the better it is for us, and we can keep producing the show at a high level. If you like the show, give us a like. If you want to forward it to somebody who would find benefit from it, please do. The more people that we have listening, the better it is for everyone. So without further ado, my friends, my conversation and coaching session with Michael Belfor in the 360 Experience. What's up, Surfer?
Hey, what's up, Surfer? How are you?
I qualify as a surfer. Like, I started about 8 years ago, and I don't like cold water, so I surf only when I'm down in Costa Rica, I'm spoiled because down here there's great waves, warm water, and nobody fighting for waves. So it's pretty cool. How long have you been surfing for?
Since I was a kid. I started Santa Cruz when I was 8 years old, honestly, on a boogie board or a body board with my uncle, and no wetsuit, 45, 50 degrees water, I feel like, back then. And yes, it's been a lot of years, but on and off, right? It always tends to be on and off. Things happen in life, marriage, wife, kids, kind of take me off my board here and there. But where I am right now, whereas we're recording this in South Orange County, and the water temperature is about 70 degrees, Tim. So you got to make the trip.
Nothing better than being out on a board, bro. That's definitely a form of meditation. So
For sure.
let's give the listener a little bit of a background. Tell us how long you've been in the business for, your current role as an originator, and maybe tell us about a couple of your best years just in terms of production.
Yeah, absolutely. So I started back in 2003. I was working for a big bank while I was still in college in San Diego. And at the time, my grandfather had gotten sick. So I essentially left Southern California to go home to not Northern California, where I'm from, to help my grandmother through the season that we're going through. My grandfather had passed, and I was real close. And essentially, they had a huge hand in raising me. I then worked maybe 2 months at Enterprise Rent-A-Car in Berkeley, Shattuck and Ashby. And I picked up a guy one day. He's like, "Oh, you should get back into mortgage and get back into banking." And at the time, I was 23. And so, he gave me the card of somebody that was running a branch in Richmond, California. And from there, just took off. I was recruited by another company to go move out to Hawaii. So I was in Honolulu for a while. That was fantastic as someone who loves the water. Water is plenty warm there. And grew. And then, 22 years later, here I am. The thing that I find funny is I think most of us in our industry could honestly say I had no intention of working in a mortgage. This isn't something I wanted to do. It's not something I really even think about. When I started, I was 23, and I was 23 when I started. And I think most of us in our industry could honestly say I had no intention of working in a mortgage. This isn't something I wanted to do. It's not something I really even think about. When I started, back then. Didn't really know much about lending, real estate, mortgage. My grandfather had properties in San Francisco. My family's been around real estate for a number of years, one way or another. But I never had an intention of doing that. I wanted to teach. I wanted to coach. I didn't want to work in lending. And Here I am 22 years later, blessed by it, thankful for it. We had a couple of really great years. One year, close to 80 million. The following year, 77 million. Had a couple of years that were decent, right? In production, but these last couple of years, I mean, we've been around 40 to 50 million, even post COVID, which has been incredible. But yeah, I mean, mortgage is something that has been just a blessing to me, myself, what I do outside with my church, teaching kids ministry, mission work, went back to school to get my bachelor's and my master's degree. I mean, it's been able to really kind of afford these opportunities in my own personal life, which has been incredible. But as you know, Tim, once you grow, you get to this point where you have to kind of uh, implement staff to help your production. And that's what we've been doing and just growing kind of year over year with that.
So I want to rewind to 4 months ago because I
Yeah.
think that's a good launching off point. Correct me if I'm wrong, but in February of this year, in 2025, you were able to capitalize on that little dip that we had for that short period of time in interest
Yep.
rates, and I believe you were able to lock 17 loans in that month. Is that correct?
Correct. Yes.
I want to understand your strategy. We're gonna at some point in time in this dialogue, we're gonna move into you bringing forward anything that you'd like me to coach you on, and I'm
Yep.
going to coach you. But I want you to do a little teaching now. So tell us about very tactically what you did to be able to capitalize on that opportunity in February.
I was a blessing. I had quite a few clients that stuck with us through the higher rates and what we had October 2022. I remember well. I remember dates ironically really well. No idea why, but I could remember October 20. It was it no, actually late September going into October. It's because a good buddy of mine was getting married. We were getting ready for his wedding, and that's when we saw rates shoot up that one weekend, right? If you recall, we had rates in the sixes, and then all of a sudden they went to seven, seven and a quarters all over the news. We saw people closing, and a lot of buyers started to jump onto the fence. A lot of them were already on the fence, but now they're really on the fence. And so we started to kind of really share this idea of saying, hey, well, if you purchase a property now, we know in due time interest rates will improve. What if we were to actually give you an incentive for closing a transaction with us, whereas we're, giving you credits or amounts to offset closing costs to help benefit you and get you off the fence to purchase a property now. And that way at least you can get in. We know home values will continue to appreciate. Even in a market like now, where we're seeing days on market, increasing, and we're seeing home values come down a bit. We're still seeing, if you look at kind of the larger scale, appreciation in most of our markets here in California. So we shared that. A lot of folks really want to step on board, and they were fine with that. They're excited. They know they're getting a great property at a great price, and really working with the seller in that capacity. And then we waited for May to come, and everybody had the target date May 10th. If you recall, May 10th of 23. We're all like, rates are going to drop. That's our target date. Barry Habib was saying it. Tim, I think you may have even said it. We're all targeting May 10th, and didn't happen for one reason or another. There's always these extra things that could cause these items to really stall out, right? And we knew that still rates were going to improve in time, so these clients are still on board. I'm still following up with them, still kind of watching the market, giving them updates. And then of course August of 24 occurred, and then September, and we started to see rates really drop really quickly. It was essentially overnight. And that's where I, admittedly, and even on this podcast with you, Tim, admit that I messed up. I told my clients, we should have taken advantage of that. We didn't. We're going to be ready next time. This is what we want to do. At the same time, I was introduced to you, Tim, through my company, the Loan Atlas. And so I was learning how you were integrating that strike rate system, where you really kind of coached the product through, where you understood and could share with your clients and really your database that would be irrefutable to not take advantage of that opportunity once it came back. So then I used Barry Habib and MBS Highway. They have a great program, Strike Rate. Our company has one as well. candidly. However, I really like the ease of use of what MBS Highway has created. So I essentially would then enter in a client on that uh, their strike rate. I'd manually do it if they weren't already, already uploaded through the system. Is the system tends to upload it already, and it said, okay, this is that strike rate. So when February, March came, and we started to see those rates dip real quick, we were ready. We had 17 people because I was honest with them. I said, hey, look, we should have taken advantage of this in August and in September. We saw a jobs number come out in early October. It really ended that 10-day blip that we had, if you will, in September really quickly, and rates really kind of went up as we headed into November and everything that took place thereafter. However, when this occurred, it was because of a Treasury Secretary's announcement over the weekend. The new Treasury Secretary that we have in office today, it mentioned, this is kind of what they're keeping eyes on. Of course, the market reaction base of headlines. We're seeing a lot of market reactions off of headlines. Rates dropped really quickly. We started to see that 10-year Treasury head back to the 4% range, breaking what we were calling the floor then of 4.12. As it continued to improve, we got 17 files ready. We actually had more. We're just waiting, to get the okay to run, credit checks, because we don't want to run a credit check without authorization. We locked in 17 of them. Each one of those clients were incredibly excited, stoked, because their savings was substantial. To those that didn't get us their stuff or okay us to do so, they're kind of kicking themselves. But again, we're watching things closely. Even a week or so after that, I was actually at a beach house in Oxford, Tim, and we were out there surfing with my kids. And I remember barbecuing at this house and, cooking for my family and watching futures on my phone. And I think I even put something in the Lone Atlas community about it. Is anybody else watching futures right now? Because we saw literally one night where it was Sunday night, the 10-year Treasury hit 3.86 or 3.85. Like, we know if it hits below that 4% on the 10-year Treasury, we could kind of get a sense of what mortgage-backed securities would do. There'd be more opportunity there. So then again, I was telling my assistant, hey, get ready for tomorrow morning. I was kind of prepping him, make sure we got these other folks that we could have got in, this other 20 or 30 applicants that really wanted to take advantage of this opportunity on board. Unfortunately, the next morning we woke up, and even though we had 3.85, 3.86 on our 10-year Treasury, went back to 4.3 literally within a few hours. So there wasn't much of an opportunity, but now we're still watching things very closely within the last week or so, keeping people up to date. I did do, as Tim, you had mentioned, the call, the voicemail, the text message to each one of our clients on Thursday and Friday saying, we're watching things incredibly closely. And if that opportunity comes up, we know that you're ready. We're ready. We're going to take advantage of that for you. So I guess to kind of wrap up a recap, it was simply just telling folks, let's get you started. And to those that I haven't spoken to in a while, apologizing and being candid and say, hey, I'm so sorry. I haven't been that great about following up and keeping in touch with you. This is what we're looking at. Being candid, transparent. I think they appreciate the candor in that. Actually builds rapport, I think. And then turning around, saying, this is what we're watching for you. This is your strike rate. Even sending an email with a snippet in the body of the email of the strike rate from MBS Highway so they can see what we're looking at for them, so they know when we get there, we're going to take advantage of that. And candidly, to those listening, and Tim, I'm not sure if this is going to go up by then, but we had the 4th of July, and I love what you do on the 4th of July. It's another thing that you had done, Tim, that I steal, is reaching out to, our past clients and referral partners, what have you, before the 4th of July holiday. And of course, just sharing that for those that qualify at that time as well. So, hey, just, we're watching this. Even this week, we're keeping an eye on things, because if there's that opportunity, we're not going to let you miss it. We want to make sure that you take advantage of it.
Let me break all this down. That was beautifully articulated. And I'm going to ask you a question at the end of this, but I want to synthesize, summarize for the listener a few things that I heard you say that I think are really important.
Please.
Number one, you said that there was a period of time in August and September of the previous year in 2024, with those windows of opportunity, which can open and shut very quickly. You weren't quite ready for it.
Correct.
A common theme. I mean, that's something that a lot of people experience. And I think that the mistake that's made, Michael, is that loan originators have a belief that the time to call their client and tell them that it's a good opportunity to refi is when the rate drops. That's wrong. The time to call your client and talk to them about refinance potential opportunities is before rates drop. To have that conversation when you have the time to have that conversation, to educate them very thoroughly, because if you wait until after rates drop, not only are you going to be short on time and you're not going to be able to have depthful educational conversations with them, but you're also going to be competing against the servicer and other marketers that are marketing to them to refinance their home. So the preparation takes place now, and you simply say, look, I don't know when they're going to drop, but I do know that they will drop because rates are cyclical in nature, and there will be a point in time where this issue of inflation is tempered, where the economy starts to slow down, and we see a rally in the trading of mortgage-backed securities, and the time to isolate what the rate needs to be in order for us to take advantage of it, for it to make irrefutable sense for you to move forward with the new loan is now. Let's come to that agreement now. So if you're on vacation, if you're busy, I can jump on that window of opportunity. And it's incumbent upon you, not just you, but all of the listeners, to tell the story that you experienced in February, which is you had people in February eligible to be refinanced beyond those 17 people that for whatever reason, they decided not to move forward with it. Okay. Right. Maybe they thought they were going to come down further, they were too busy or whatever. It's incredibly important that you tell that story now about your experiences of, I have 7 people, 9 people, 11 people, whatever it is that opted to not move forward in February, September, or August, going all the way back to 2024. And every month that goes by is lost savings, and it accrues and it accumulates. And I don't want that to happen to you. I want to make sure that we jump on the opportunity as soon as it becomes available and get you locked in and reapproved right away and start saving you money as quickly as possible, because sometimes these opportunities are fleeting. Now, the people that tell you that they want to wait, and again, I'm speaking to everyone, not just you, Michael, the people that tell you that they want to wait, I'm sure you've had people say that, back in August and September, oh, I hear that rates are going to come down further, which, by the way, in September, rates did drop by 50 basis points as a surprise by the Fed. And that moment, rates went up. Mortgage-backed securities went up. They rallied pre-meeting and they sold off post-meeting, which is antithetical to the average consumer. And then they're reading in the news that, rates are going to come down further. There's going to be 2 more reductions this year. And they tell you, I want to wait. When they tell you they want to wait, what they're really saying is, I don't trust your wisdom. They're saying, I think I know more than you, or that this article that I read that was written knows more than you. That's just information. That means that you haven't done a thorough enough job of educating them. Your goal and objective should be to build trust, which then results in surrender. Okay. Yeah. People will let go and yield to an authoritative figure, especially as it relates to their money, if trust is built. If they think they know more than you, once again, it's only because you have not done a thorough enough job building credibility and authority with them. And therefore they think that they need to heed the advice of someone else other than you. So that's something for everyone that's listening to reflect upon. And I'm sure, Michael, that what you've learned over the course of the last year of these 3 different windows is how to present yourself more thoroughly and how to take authority and initiative. It's not asking them if they want to refi. It's telling them it's time to refi, and come from a perspective of confidence. And here's why it's time to refi and how we're going to go about doing this. So the question that I have for you is relating to this thing that you said at the very beginning. So we rewind the clock back to October, late September, early October of 2022. Yeah. Rates start to spike radically. I remember exactly where I was at. I was in Europe on my honeymoon when it happened. And when that happened, you had conversations with those people about a credit. Tell me a little bit more about the credit. Is it a credit for like their closing costs on a refi? Is that what you were offering them?
Precisely. I mean, it is something that you mentioned at Loan Atlas as well, right? And it's this idea that we will pay the cost of that refi, the hard cost. We can't pay taxes, insurance, and those items. We're offered a credit to offset those costs. So essentially they would get a no point, no fee refinance. And, of course, the rate would provide the savings to be substantially lower. So they would see really kind of the return of investment or rate of return pretty instantaneously, but want to make sure it still hits that target rate that they want. And it was just another incentive. Our company introduced a program that we call BIFFI that essentially did just that. However, I think a little bit further, and it included more of the escrow costs and things like that to offset those amounts so that we could benefit the client and benefit our borrowers. Really, and just share, like, if you could wait 6 months, make those 6 months payments before you do that. We want to make sure that we give you that benefit so that, you're looking at, something that's going to benefit you for buying today versus waiting. Because as you know, if you buy a property for 7% at, let's say, $1 million, and that property is worth $1,100,000 the next year, you would have spent another $100,000 for something to have a slightly lower interest rate, or for simply just sitting on the fence. So financially, it would make quite a bit more sense to do that, so they get to accrue that equity as that appreciates.
So I want to take a little bit of time to make sure that we're educating the listener here, because I find,
Sure.
Michael, a lot of people don't really understand the concept of a no points, no fees refi, or I'll just also add to it a no points and partial fees refi. I mean, it doesn't have to be completely free,
Yeah.
but what a lot of originators don't understand is the value of being able to take and pay some of the non-recurring closing costs out of your commissions on behalf of the client.
Yeah.
It's obviously very difficult to do on a $118,000 loan, if not impossible. Okay.
Right.
You have a certain threshold that has to be met, say 400,000, something like that, depending upon your pricing structure. If you're, producing branch manager, what kind of comp structure you have, if you're a broker versus an IMB, et cetera. But to the extent that you can structure a loan in a way to where you can credit some of your commissions to the non-recurring closing costs, or all of the non-recurring closing costs on behalf of the borrower, you will never have an easier sell. It's the easiest sell that any loan originator will make. So let's hypothetically say it is a $500,000 loan and you're getting 200 basis points in your comp structure, just as an example. That's 10 grand. And let's say that the non-recurring closing costs are 4 grand or 4,500 for that $500,000 loan, depending upon what state you're in, depending upon what the closing agent's fees are, et cetera. That's still, $5,000 to $5,500 left over, and the borrower gets a free loan. And now, even if it's a 3/8% reduction in interest rate that saves them $114 a month, it still makes sense because it didn't cost them anything to save $13,000 or $14,000 a year. And that's why I say it's the easiest sell that you will ever make. Now, I've also had originators say to me, and including ones that used to work for me, I'll never forget. I do like had some $1 million borrowers back in the day, and sometimes I would do a no cost refi and make 3/4 of a point on it, $7,500, and then I'd pay their fees, and those fees would be say $4,500, and I would net 3 grand. And my originators that worked with me would look at that and say, "Why are you working for so little? How can you justify, making, less than 0.5% on a loan?" I said, "Okay, well, let me ask you a question. So if a borrower came to you today and said that they had a $100,000 refi and you could make 300 bips on that loan, would you do it?" And they said, "Of course I would." I said, "Okay, so what's the difference?" I mean, it's money's money. You don't deposit basis points in your bank account. You don't pay your mortgage with basis points. It's money that pays the bills, right? So,
Yeah.
but it
Yeah.
goes deeper than that, Michael. And I want you to comment on this. So not only are you making some extra money by providing this service, but you're building long-term loyalty. You see, you want to be the gatekeeper of your database.
Yeah.
So if you can display that you're consistently proactively managing their indebtedness for them, not only are they going to stay loyal to you and continue to work with you and buy other homes with you, but you will also find that they will start referring their friends and family members to you. I would get a ton of referrals. People say, "Hey, Joe referred me to you, and he told me that you could refinance my loan for me at no points, no fees." And I would say, "Okay, well, it depends upon the loan amount. Let's talk about it. But if I can make it work, yes, I will." And I would get
Yeah.
a ton of referrals that way. So feel free to comment on that.
Huge. I mean, my whole MO, if you will, and this is truly what I believe, is just love God, love people. You do that, you do everything right. What does that mean? Build bridges. You don't build barriers. What can you do to just serve people? We're here to humbly serve people, take care of people. It's the best profession I think that I could have found or fallen into for someone that just wants to serve your community. And that being said, I mean, the question would then be for the listeners: how many people spend money on Zillow? How many people spend realtor.com? How many spend on Opcity or all these other lead funnels? I'm not saying anything poor about them. However, wouldn't it be better to take care of your own database, take care of your own people, take care of like those that already trusted you to make the biggest purchase that they may ever make in their lives, and continue to nurture that relationship? You couldn't have said it any better. I love the thought, and I'm going to steal that if that's okay, about basis points. You get paid on basis points, get paid to take care of people. And at the end of the day, if you're helping somebody, You're bettering their situation. You then have another raving fan that may have been already a raving fan, but now they're a super raving fan, right? And if you go back to the old database and you go through spreadsheets, or, I had a day planner, right? But like, Rolodex, to go back before the CRM days. And I know you're a pioneer of the CRM, Tim, but it's funny because you had your platinum, you had your gold, you had your silver, you had your bronze. But what if you move some of those bronze to silver and some of those to gold and some of those to platinum just by taking better care of them? And I think it goes to this point where you have a refinance that gives them benefits, that really gives them no cost, and it just shows your care for them. And then again, it goes back to that John Maxwell quote that I love so much: is people don't care how much you know until they know how much you care. If they truly know that you care about them, you're looking out for their best interest and their indebtedness, as you had mentioned, it puts them in a better situation. It puts you in a way better situation because they're more likely to do one big thing that Zillow Realtor gives you bogus leads. They're going to send you better leads, their friends, their family, their colleagues, their coworkers. And that's really what it comes down to, is just what can you do to better serve people so that you become the number one person, no matter what, that they're going to think of when they think about purchasing or refinancing your property.
That's right. So just to summarize, first you need to build trust and authority so they surrender and yield to your advice. Once they do, you need to proactively serve them and continue to manage their debt and seek for cheaper money for them all the time. If and when you do that and deliver on that promise, the leads are going to flow. You're going to have a lot of referrals coming in. Trust me, that's exactly how I built my business. So we're going to get to me coaching you in just a minute. But before we do and kind of shift gears here, I just want to ask you, what is it, Nate, share with us one other thing about the Loan Atlas that you like. You mentioned how it helped you get those 17 refis. Anything else about it that has been beneficial to you? I'd be curious. And thank you for being a member, by the way.
Yeah, I mean, when you came to our company for business planning last year, and I just knew there's something about you, and it's like, man, there's something about kind of your attitude, how, I hate to say it, Tim, how chill you are, and it seems like nothing bothers you, but it's like you've been doing this and you have been ranked so high in our industry for so many years, and you're someone who's well sounded and respected. The second it came out, I emailed, you could ask actually Denise. I was probably one of the first people. I want that. I need that. And it was because I realized, 20 years, there's a lot of things I learned. There's a lot of things I do right. There's a lot of things I don't do so well. And so what I needed to do was find out what I'm not doing, what I should be doing, and how to implement that to my own business. There's so many things in Loan Atlas to pick up on. And I went crazy in January because it was slower. I was a little fearful, as a lot of us were start of 2025, because the market was very slow. So I use that time. And there's really this thought of there's either times to sharpen your axe, and there's times to just kind of swing that axe and just keep it going. Right. And I use that time to really sharpen that axe. And I picked up a lot from Loan Atlas. I'd say, I completed probably all the pass at this point. I really just dug in deep. I told my assistant, this is what I'm doing, that we're going to find ways to kind of get better. Right. And we did. And the perfect loan process is probably my favorite thing that I've learned and kind of continue to refine. We go at that every single time now. We have the checklist that you've created in Loan Atlas to create what we call the perfect loan process. Of course, you call it the perfect loan process, so we're calling it that. But we go through it and we review it at the end of every month. In fact, we had that call this morning. We had a decent month. We have some stuff carrying over into July now as well. So we're having a really good start to July. But we had a chance to go through this now. What are we doing right? What are we doing wrong? What could we do better? Are we hitting all these boxes? Are we making sure that we're continuously doing this? And that perfect loan process, for anybody who maybe has heard the term or hasn't heard the term, is something to check out in itself. I think the Loan Atlas, even for that, is huge. But the coaching, the community, that's within there as well. The way that I see other loan officers and loan professionals, branch managers taking care of one another, it's unlike any community I've seen. And I've been part of several coaching programs. I've, coached. I've seen these things. This is something that I think is unparalleled in that service. And again, that's probably the number one thing that I could take away from there, is just that, right? And the knowledge base that it continues to build, and the things that you continue to add to continue to ensure that all members of Loan Atlas continue to grow.
Thanks so much for saying that. I mentioned to you before we recorded that I just got back from Las Vegas where I was speaking at Mastermind, and we had a private gathering of 42 Loan Atlas members. And it was just so beautiful to watch them supporting each other, helping each other, masterminding together.
Yeah.
The community is getting stronger and will continue to get stronger. And we will continue to stay one step ahead, hopefully, of what everybody needs to be able to provide them with unprecedented value. I need you to be ready to talk to me about what you need me to be coaching you on, because we're going to go into a live coaching session. I'm with
I
my
love it.
coaching hat now, taking off my podcast hat, and
Yeah.
I'm here to serve you. So I'd really love to know what you could use some help with.
So that's the hard part. I think fear, I was fearful, but what do we do when fear's not there? So I was thinking about like, I don't know. I mean, I don't know your background, but to share mine, Christian, I think about things, I look at scripture, I find out these things. Sometimes it's not the season you're in, but maybe a season that will come up upon and you feel like you could be better in that season. So maybe the fear is a good one because a lot of people are concerned. We did the thing with Josh with the Stirred series. Josh made a point. He's like, realize when you guys come here, be transparent. He's like, a lot of people are suffering. A lot of people in the industry don't even know how to make a mortgage payment, or they're not sure how they're going to make the mortgage payment because it's so hard right now. And so the thought was, okay, fear was something I dealt with, but a lot of folks watching this are, and which is why I was so transparent. And even at the end, I asked Josh, hey, if you want, I can stick around and help with some of these things. So maybe looking at fear, maybe looking at balance, because I have a 1 year old and a 3 year old. I'm 45. I feel like Abraham having kids so late in life, but of an amazing wife and just trying to find balance to be more present with them, to really be able to put this bad boy down and, just be more focused, to be there for my family.
So let's
Those
slow
are
this,
things.
let's slow this down. I'm going to, I've never, obviously I've never coached you before. But a part of my role as a coach when I'm coaching a client is to get people to slow things down. Sometimes we can fill a lot of space with words rather
Yeah,
than slowing it down and taking a look at some of the things you're saying. So I want to reflect back to you what it is that I've heard you say so far.
please.
I heard you say that you started off the year, you had some fear, understandably so. A lot of people are in fear right now. I also heard you say that what you really aspire to be as a present husband and father.
Yeah,
And you referenced your phone and how you can be tethered to it. In fact, you were in Oxnard, as you shared earlier, and you're barbecuing, but you're also watching, um, the trading of mortgage-backed securities and things of that nature at that time. So
yeah.
probably weren't incredibly present in that moment when you were barbecuing. So no shame to that, first of all. And I'm not about ever shaming anybody as it relates to somebody that I'm coaching. It's just information. That's all it
Yeah,
is. Neutral,
100%.
neutral observation of information. Okay. So here's the thing. You've actually posed one issue, even though it sounds like two issues. It sounds like two issues, and one of them is fear, and the other one is balance and presence. But let's slow it down for a minute. So every time you grab that phone, if you could slow it down and look at the narrative of what's happening inside your head that caused you to grab that phone, what might that narrative sound like? Give me a couple of examples.
I mean, you know, is there a need right now? Did anybody reach out, a referral, right? There's plenty of agents out there, as you know, that will like, hey, if I refer you someone, I really want to get them set up pre-approved as soon as possible. We saw a property, what have you. You don't want to miss that. Why? Well, I think I know where you're going with this, but it's obviously fear. Because if you fear, you know, if they don't call me, they're going to call the other guy, right? They're going to call John down the street or whoever, right? And I think that might be a large reason as to why. And if we could capture more clients, it could be Citizen Kane syndrome, but you're always trying to aspire to grow, right? And if you could help more, then help more, right? And yeah,
So let's hit pause there. You're
sure.
going down the perfect path right now. So what I heard you say is that most of the time that you habitually go to grab your phone, it's to be looking to make sure that you haven't missed something important.
Precisely.
Potential referral, a status update from your processing staff, just in general, checking your email to make sure that there's not anything in there that's important. All of those are fear-based driven activities. Okay. So the mind, its job is to protect you. That's the job of the mind, to predict the future, and to strategically plan to make sure that you're safe. It's the same mechanism that you use when you look both ways across the street. Before you do so, it's the same mechanism that you use for strategic planning if you're building a business plan. And left to its own devices, it's going to run on autopilot in the background, scanning the landscape for danger, because that's what we're talking about.
Yeah.
Danger. Okay. That realtor would be pissed off at me if I didn't get back to them right away, or if I don't take care of that file that has an appraisal review that was, cut of value, that somehow that deal is going to blow up. I mean, all these stories that we craft in our head to ensure that we're safe. The challenge with that is that it robs us of presence with our family, with ourselves, with a client that we're meeting with, perhaps even when, have you ever had a situation, Michael, where you're meeting with a client and they're talking and you're not listening to them because you're thinking of something else that might be going on that you need to be worried about?
Of course.
Right?
Of
Yeah.
course. Yeah. Yeah.
Okay. So that's normal. There's nothing broken. There's nothing wrong. What we want to do is cultivate self-awareness. We want to say, oh, there it is again. My mind's worried about something that doesn't need to be worried about right now, and develop mechanisms and strengthen the muscle of being able to return to the present moment, to be with our family, to be with that client, to be with that real estate agent that you're meeting with, or whoever it might be.
Yeah.
Now, one of the ways that we can work on this is to develop agreements with the people that we associate with. So let me ask you, you mentioned that the realtor may say to you, hey, if I refer somebody to you, I want you to be right on it and get back to me right away. What do you say when they say that to you?
Often I say, understandably, but I have two small ones and an amazing wife at home. Usually when I get home at 5 is for me to take over with the babies. And, at that point, on a case by case basis, maybe, after we put them down, I can follow up thereafter, we do bath and bedtime and all that. It's usually not till 7:30, 8 o'clock. However, I'm back in my office at 8 o'clock the next morning. And, sometimes it seems like it goes okay, but I always question, did it really go okay? And, 9 out of 10 times they usually don't reach out to me, because I think more folks, and more often than not, respect the fact that, hey, I'm putting family first. Family's everything. It's why I do this, you know. And so I think it goes over fairly well. There's one occasion last week where someone that I work with that I had a great relationship with, find out he's working with somebody else because he likes this person who will take calls and be able to talk to their client 8, 9, 10 o'clock at night and on weekends, what have you. And, at this juncture of my own personal career, it's a hard thing to do. It's not something I would do, not something my wife would be very happy with. And I don't want to cheat my children out of opportunities, or myself out of opportunities to spend time with them as they're growing up.
Okay. So what I heard you say is that you do have this conversation with the realtor,
Mm-hmm.
and you explain to them, my evenings are sacred to me.
Mm-hmm.
I have young ones at home. My relationship with my wife is incredibly important to me.
Mm-hmm.
I'll be returning calls the next morning at 8 a.m. And you think for the most part that the conversation goes well, but there's this part of you that it sounds like deep in the background isn't so sure if they're buying into it or if they're going to adhere to it. So is that why you still continue to check your phone? Because you're worried that they're going to send you a text at 7 o'clock and that they're going to be expecting you to respond to it?
Probably, yeah. And because I always have that thought, and I think I always have had that thought of competition, especially in a market that's kind of bleak like this, where it's harder,
Mm-hmm.
that, well, if they're not going to call
Mm-hmm.
me, well, they have 2 or 3 other people that have been calling them every week for the last however long, right? And just going to say, okay, well, can't get a hold of him. Well, let's send this to so-and-so. Well, they responded. We got them pre-approved. Don't need you anymore. Yeah, kind of that whole thing, right?
Yeah. So I can develop a little tighter script for you, which I'll give you in a moment.
Okay.
But before we go there, I think what we want to highlight is what we're talking about is drawing healthy boundaries, which I applaud you because you're attempting to do that. And what we're also talking about is forging ironclad agreements with our clients and referral partners that we don't break. So here's the thing. I've studied this a lot, both autobiographically and over 15 years of coaching people. The biggest violator of our boundaries is us. We violate our own boundaries more than anybody else violates our boundaries, more often than not. So we establish an agreement, set a boundary like the one that you've said, but then you're breaking the agreement with yourself and violating your own boundary by checking your phone. Okay. So all that says to me, and by the way, it's very common. So I'm not critiquing you. I mean, there's no part of this is a critique. I'm just trying to shed some light on this for you. Yeah. So all that says to me is that, again, you don't believe the authenticity of the agreement that's been made because you still have that F word, fear, creeping in the back of your mind with a subtle voice saying, yeah, but there might be another loan originator who's taking that call right now because I didn't respond to it quickly enough. Okay. So let me ask you, first of all, is my summary true for you? Because the only thing that matters to me is it's true for you. I could be wrong, and I want you to tell me if I'm wrong, but does that sound accurate for you?
Yeah, I mean, essentially, yeah, for the most part. I mean, for sure, if I'm not the one to take that call, well, then, there's another person who's been bugging them. Let's give that person a shot, right? And we perform at a great capacity. They know our services. They know kind of the treatment that we provide to them and the responsiveness and transparency throughout our transaction. But still, that concern of, well, so-and-so. And it came up, especially last week. Well, I called, this other loan officer, I won't name, because, it was just working back and forth with an HOA and I work with them a lot more so now because I know you're not available in the evenings. I know you like to, spend time with the family and so forth, and they'll take a call at 8, 9 o'clock at night and get somebody approved. I'm like, yeah, I mean, I just value my own personal time too much for that. That's a personal thing, obviously. So it may not be one relationship may not be the most important one at this point. Right. But yeah, and it is a harder market. So, there's less transactions to be had. So those that are still in our industry are still striving to, kind of do what they will. And I feel like we're blessed enough as to where we're still having a great year, but there's still that concern. What if, right? And that what if is kind of a big scare, if you will. So yeah, I think you're, so I'm kind of saying it back. I think you're spot on, Tim.
Okay. So let me ask you this. Would you name for me 3 realtors who you work with, just first name's fine, that you've shared that boundary with them, and to the best of your knowledge, they've respected it and have not gone somewhere else?
Absolutely. 100%.
Okay. Could you name the 3 people?
Yeah.
Go
Yeah.
ahead.
Brad, EJ, Barton, Ben. I could go on. Yeah.
Okay. So we have to be careful to not assume, because again, fear is powerful and the mind is, again, scanning the landscape for danger. So you get one example of somebody says, hey, I needed somebody at 9 o'clock at night on an HOA situation and I knew you want to be bothered, so I called them. We could easily jump to the conclusion that that's all of my realtors feel that way. Okay, but you just rattled off 4 or 5 actually that have not shown you any evidence that they're going to abort their relationship with you and go elsewhere just because you weren't making yourself available at 9 o'clock at night. Right. Okay. So let's be careful to not buy into that story that this is some viral thing that's like, traveling and a virus that everybody else is buying into. So next thing I'm going to ask you is this. How old are your kids?
1 and 3.
What are their names?
Amelia and Lily.
Okay. Amelia and Lily. Beautiful names. Do you believe that they are able to feel your energy at this age of their life?
Absolutely, yes.
Do you believe that they're able to feel your presence at this age of their life?
Absolutely, yes.
Do you believe that when you are fully connected with them, they feel your love?
Yes.
And do you think that that's a benefit to them?
100%.
And do you believe that when you're riddled with anxiety and worried and distracted, when you're changing their diaper or laying on the floor and playing with them, that they can feel that you're not really there with them?
100%.
So with Amelia and Lily, And by the way, I would presume you agree the same with your wife as well, that even though we know someone's physically there, we also can feel whether they're energetically and emotionally there. Okay.
Precisely.
So, what I really want you to remember is that life balance is about choice. You have free will to choose whatever it is that you feel is best for you. And I'm not here to tell you what's best for you, but you came forward with an intention and a desire to be balanced in your life and to be connected with your family.
Yeah.
So I presume that's the choice that you want to make. I have a client by the name go to the 360 experience. I had several people in Vegas tell me last week that they loved the episode. He's a wonderful guy. I'm going to share with you something that he did when he went through my Leadership 360 program. He was wanting very much the same thing that you're describing that you want. So when he came back from the retreat in Costa Rica, he made a commitment as a part of his business and life plan that he was going to, your 3-year-old could probably do this with you, your 1-year-old couldn't, but he was going to get a shoebox and that they were going to color it together. Okay, him and his 2 kids, his 2 girls. And he let the girls color all these different things on it, flowers and bunnies and all these kind of things. And maybe he'd sketch them and they'd color it in. This shoebox became the sacred place that he would put his cell phone the minute that he walked in the door. And they would put the lid on it and it would stay in that box closed until 8 o'clock at night after he read them a story and put them to bed. And then he could open the box and check whatever messages that were waiting for him or not, or just go to bed and check them in the morning. Okay. If that's possible for you or for him or for anybody else. But he created a ritual around presence and it became very powerful because his little girls, as soon as he would walk in the door, if he would be on the phone, they would walk over to him with the shoebox in their hand and say, Daddy, put the phone in here, put the phone in here. And it became this playful thing. But the key thing was is that, and the reason I asked you those questions is because those 2 little babies of yours, you're their father and they only have one. And your heart and your love is incredibly valuable to them, especially at this very young age. Yeah. So the question is, what's more important, them or that realtor who decided that they were going to go to another lender at 9 o'clock at night because you weren't available for the HOA? So with that said, let's talk about how we solve for that realtor situation, because I think that there's a way to just in a very tactical way solve for that. So what if you went to all of your referral partners and said, and I'm spitballing here, I'm just coming up with a script off the top of my head, but you went to them and said, one of the things that I've been thinking a lot about lately is, first of all, I'm really grateful to you for the consideration that you show me in the evenings when I'm with my family. So thank you for respecting the importance of me being with my wife and kids every night. And at the same time, I want to do the very best that I can to be the best partner to you possible. And I know that one of the most important things when you're talking to a new client, a buyer, is that they know when they're going to hear from me. So I'd love to provide you with a script, and it might sound something along these lines, and you're speaking to the realtor right now, that when you're talking to a client, if it's after hours or on a weekend, that you simply share with them, look, I have a partner that's a lending professional that I think very highly of. His name is Michael Belfor, and he is terrific at what he does. And the nature of our relationship is that I have access to his calendar. He's given me a calendar link. So let's go ahead and get you scheduled for a 30-minute or a 1-hour consultation with him right now. So you have that locked in, and let's make it as soon as possible so you can start to get the education that you need to make an informed choice about moving forward with buying a home. And then they just schedule the appointment. Okay. Now the realtor feels good because they know that you're locked in and where they're going to hear back from you. Borrower feels good. And you just wake up in the morning and you got an appointment scheduled for tomorrow in your time block rather than being interrupted at 8 o'clock at night. How might that work? How do you feel about that as an idea?
Amazing. That's a great idea. I love that. Yeah, because we did in the past, flyers with QR codes for application to apply now or email introductions, what have you. But that in itself is huge because most folks don't want to just jump on an application and apply on their own anyway. They usually like to have a consultation, to have a conversation. In order to do that, to feel the comfort to move forward. So that's great. Yeah, I love that.
You could even set it up to where as soon as the appointment's scheduled, they're automatically emailed an application link with some instructions. So they
Right.
start to begin the process even before they speak with you. You
Yeah.
could also, now that I think about it, say to your realtor partners that, and you want to be authentic about this. I don't wouldn't want you to say this if it's not true, but like there are certain real estate partners that I have that I consider to be VIP relationships, and you're one
Yeah.
of them. And I want
100%.
to set up a VIP calendaring process to where you have access to my calendar. When you have a buyer at any time of the day, you can schedule them. I'll keep my time blocks open certain times of the day, et cetera, et cetera. And this ensures that they're going to be taken care of. And I promise you that I'll get back to you as soon as I'm done with my conversation with them. And then you make the realtor feel good.
Yeah.
As Michael, is that people are not for the most part that impatient. It's that their fear kicks in. You see, when you think about it for a minute, that real estate agent that is calling another lender at 9 o'clock at night about an HOA situation, they're just operating from fear.
Mm.
I mean, that would be the only reason why they couldn't wait to talk to you about it at 8 a.m. tomorrow morning. There's nothing that's going to happen at 9 o'clock tonight, other than the fact that they're not going to be able to fall asleep tonight because they're going to have it on their mind
Yeah.
because
Yeah.
they're worried and they're in fear.
Yeah.
Nice thing about what I'm suggesting to you about this VIP calendaring situation is that it starts to quell the fear a little bit. So like where I realized this was that like I'd leave the office to go work on my business for 6 hours. And initially, like I wouldn't change my voicemail or put my autoresponder on my email because I didn't think to do it. And then people would be calling my front desk, and then my office manager would be texting me while I was at the local Barnes and Noble working on my business, and so's hair's on fire. And it wasn't even that important. It's just that they didn't know when they were going to hear back from me. And because they didn't know when they were going to hear back from me, they were in fear.
Mm.
So that's the same thing with this. There's nothing at 9 o'clock at night that can't be handled at 8 o'clock tomorrow morning. It's just that they want to know that it will be handled tomorrow morning at 8 a.m. So look, if you've got an HOA question at 9 o'clock at night, schedule yourself in my calendar for 8 a.m. tomorrow morning, and that'll be the first call that I do. And now you can go to bed knowing that that's going to be dealt with tomorrow morning.
Yeah.
Does that make sense?
Absolutely. Absolutely. Yes. Yeah. 100%.
So what else on life balance is troubling you?
That was, making sure that we adhere to, our timing that we should, when we leave the office for the day, do we leave the office? Candidly, I went so far that I had a home office, but if you looked at the way it was situated in my house, it's kind of the center. Like you walked in, there's an office there, and then our living room is here, and then what have you. As you walked into my property, now we moved that office. I took a step there where I moved actually my two screens and my laptop to the garage, and in South Orange County, it could get hot, so I don't want to be there sweating like crazy unless I really have to. But then I could come to my office to work. The thing is really creating better office hours, I guess, and sticking to them, not making that last call. Well, they just called me at 4:55. I'll call them back real quick and it'll be okay. I'll tell, my wife I'll be running a little bit late, right? But actually leaving, and shutting it down. Maybe a quick text, hey, saw your call. I'll call you tomorrow. Starting to address things like that. But do you have a better idea for something like that, where you really cut it off and you really kind of shut that door, allowing yourself to have that space to get home, to spend time with the kids and wife and what have you?
Yeah, I do. So, I guess my first question to you is, do you have a transition plan that transitions you from work mode into family mode?
I
Is
do
there
not.
a ritual there? Okay. So most people don't. And I'm going to tell you it's probably a fable, but the story works well. So there's this warring tribe of Indians on the plains of the United States a couple of hundred years ago. And when they go out, the men, when they go out to hunt for buffalo and other wild game and or fight other warring tribes, when they're done with that activity of hunting and or fighting, they come back to a local hilltop that is an eye shot of their village where the wives and children are staying in their teepees. And they camp out overnight together. And in the morning, they burn a fire with smoke that signals to the family, you know, teepees back on the other hillside, we're now coming home. And the reason that they do this, whether it's true or not, is because they realize that to take that energy from fighting and or hunting back to their family
Mm.
would be very disruptive to the family experience. So they need to have a grace period, a transition period to where they can settle down, meditate, get a good night's sleep, whatever it is that they do, and then come home to connect with their family. Now, this is very applicable to what you and all mortgage professionals and people in all other types of vocations do every day. When we go to work, we're engaged in a very wound up, energetic central nervous system, especially in the mortgage business, especially over the last few years. I mean, the way you are experiencing this business right now is very different energetically than the way you were experiencing this business, say, 5 years ago when it was a little bit more rhythmic and easier. Right now, you're fighting for every deal that you can get. Your mind is turned on. There's a lot of stress. There's a lot of fear. There's a lot of worry. So to take that energy, especially for those of you that work at home, and to bring it downstairs or bring it into your front door and expect to be able to settle into your heart and connect with your partner and connect with your kids, that's quite ambitious. It's not that easy to turn this off and to turn this on. The longest distance in the world is from your head to your heart.
Mm.
It's riddled with a lot of roadblocks along the way. Okay, so this is why having a transition plan to take us from that heady, souped up, spastic nervous system to a settled, centered, connected place is really important. And for every person that's listening to this show, and including you, Michael, it could be something different. So I already know the answer, at least in part for you, it's being on a board. I would imagine that being on a board and being out in the water kind of makes everything go away. It just washes away all the worries and all the trauma and all of the intensity and just brings you into that present moment and you feel really good in your body. Is that accurate?
Yes, absolutely.
What else does that for you? Because I know you can't go get on a board every single day, but what are the things that really settle you?
I mean, I used to train and compete in Brazilian Jiu-Jitsu. I did that for years, and that was a big one because I didn't have my phone on me. You're wearing the gi, you're on the mat, and of course, gym time too. Believe it or not, I kind of was a gym rat for a good part of my life, where you just kind of working out. I think kind of breaking a sweat, and the third thing is simply just going for a walk with my dog without my phone. Taking just Bell around the corner, or just we live on a hill, so down the hill, up the hill, and kind of it's a loop, if you will. I find that really actually therapeutic as well. Each one of those has been great for sure.
Beautiful. Beautiful. So these are perfect transition rituals. You did a wonderful job of responding to that and knowing yourself well enough to know what it does for you. Like, I mean, like for some people, it's like listening to a certain kind of music.
Yeah.
I've had clients who have put a photo of their family in their glove compartment. When they pull into the garage, they take
Mm.
the photo out, they put on a song, and they connect with that photo just for 3 or 4 minutes, and then they walk in the door.
Yeah.
Going for a walk around the block with your dog is a beautiful example. Can you build in that transition ritual that slows things down? You put your phone on sleep mode. You do your walk around the block with your dog. Maybe throw a tennis ball in the park or whatever, and get a good laugh as it's running back to you and
Yeah.
giving you the ball back or whatever it is.
Yeah.
Getting on a board. I mean, it could be a lot of different things.
Yeah.
But can you make that bridge a consistent component to where when you walk in the door, they're getting you, the
Yeah.
real, they can feel you. They're not
Mm.
getting the person whose body is there, but whose mind is somewhere else, which is what most people unfortunately do when they walk in the door.
Mhm.
And then maybe some kind of a ritual like the shoebox where you put the phone in the shoebox. It doesn't have to be like, I'm a big believer, Michael, in not like jumping into the deep end without a life preserver when no one's taught you how to swim. I mean,
Yeah.
I think it's like building up to it. So it could be that, hey, Monday, Wednesday, and Friday, I put my phone in the shoebox and I don't take it out until 8 o'clock at night after I've done bath time. And then maybe it moves to 5 days a week. And then it moves
Yeah.
to eventually I don't take it out at all. And I just get a good night's sleep and I connect with my wife and I watch a show or, we play a board
Yeah.
game or whatever it is.
Yeah.
And then I just get a good night's sleep and take a look at it in the morning. But like, I think that starting slow and building that muscle and experiencing the reward of the connection with your children and the love that they feel for you and being able to take that in. Um, I mean, you're in a very enviable position right now, my friend. I wish that I had a 1 and a 3-year-old. My kids are in their 20s, I mean,
Yeah.
and it goes by fast.
Yeah.
And I wouldn't want you to miss out on these wonderful opportunities. Um, the other thing, too, I'll add in closing to this, and then love to hear your feedback and questions, is um, setting up your day to end it right. So I think a lot of times originators will try to go home, but they haven't they haven't, first of all, brought their day to full completion. Meaning, like, is there that one lingering phone call that you need to return that you're going to
Yeah.
do on the way home? And now it's a longer call than you expected, and you're walking in the front door and you're still on that call, right? I mean, that kind of stuff happens really easily. It's like
Yeah.
better to just be like, I need to close all loops that are
Yeah.
important that can't wait till tomorrow before I go into this transition. And it's really important to set up your day for tomorrow. So writing down, like, okay, what are the things that I want to accomplish tomorrow that are very important? What phone calls do I need to return? What deals do I need to follow up on, et cetera? There can be a real soothing, mental soothing aspect to writing out your to-do list, whether it be written or whether you have it in Todoist or some
Yeah.
other organizational mechanism. But your mind will rest if it knows that there's a list waiting there that covers everything that you need to worry about tomorrow. But if you don't have that list, then your mind is going to be trying to remember everything as you walk in the door. And that's why your mind will be active and toggling through it. Don't forget this, don't forget that. But it will surrender much more easily if you take the time to document it. Does that make sense?
Absolutely. Absolutely. It does. Yeah. And that's huge. And that was one thing I've done for years was journaling, like that would be, just taking the moment, what happened today, kind of recount it, right. Or in the morning, just to recenter the mind, if you will. And yeah, I think that'd be huge. Um, yeah. Now you got my mind like going around in circles as I'm processing all this. This is good. It's really good.
So just a quick summary of that, just to,
Sure.
to make sure that, we'll get you a recording of this right away. Anthony will send it to you so then you can not have to remember all this. But,
Yeah.
first thing is to bring your day to completion,
Yeah.
followed by establishing what your goals are for tomorrow. Just a quick list that's documented so your mind can ease up on having to try to think that it needs to remember everything. Then building in some kind of a transition plan, which is what are you going to do to move out of your head and into your heart during this time between work ending and you engaging that family of yours.
Yeah.
Okay. Then maybe having some kind of a ritual once you get home as to what you're going to do, whether it be putting the phone in a shoebox or something else that you're going to take baby steps and slowly build to. So just a pretty simple 4-step process there. And, declaring it. That's another thing too, is that, like, finding an accountability partner. This is the value of having a coach as an example. I mean, somebody that can check in with you and say, hey, how did you do? Give me a summary of your last week.
Yeah.
How many did you break the agreement, versus how many
Yeah.
days did you keep it, right?
Yeah.
I think those are all important things.
I love it. That's huge. Yeah. Remember, I think about accountability partners now too, Tim. Yeah, this is great. Thank you.
What you could do, you're so active in the member forums and Loan Atlas. And by the way, thank you for all of the great inspiration that you put in there. You're amazing. I mean, you're putting in a lot of great motivational quotes on a consistent basis for the other members to feed off of. And thank you for doing that.
Yeah.
What you could do is this, is you could, if you feel called, once you've established what your commitments are, to yourself and your family,
Yeah.
you could put a post in there and say, I'm declaring this as a part of my coaching session with Tim. And I will check in every day to let you know how I did. See, that could be very powerful because now what we're doing is we're juxtaposing fear.
Yeah.
It kind of brings the conversation full circle. At the beginning, you talked about fear as your enemy in the sense of it steals presence from you.
Yeah.
Now you can use fear as your friend, because if the fear becomes not looking good in the eyes of that community because you didn't follow through on your agreement, that will build in accountability for you. So making that
Wow.
declaration and consistently posting in there every morning, hey, last night knocked it out of the park. Hey, last night fell off the wagon a little bit. Hey, and hopefully knocked it out of
Yeah.
the park lot of times. What we're talking about is creating a new habit, a new normal. Okay. And that
Huh,
gets built through momentum day after day, and having some structure and accountability to it could be very valuable as well.
that's awesome. Yeah, that's gonna that's a big one in the community, but I like it. I feel like that's a little daunting, as you can imagine, but I like that a lot. It's great.
Tell you a quick
Yeah.
final story. This is how we'll wrap our conversation, just with a little bit of humor. I've been telling this story a lot lately. It just seems to be coming up because I've been teaching implementation in my Leadership 360 program.
Yeah.
So, for 30 years, from the time I was about 16 years old until my mid 40s, um, more than 6 nights out of seven, probably 28, 29 nights out of 30, for all that time, I would habitually wake up between midnight and 2 in the morning, walk to the kitchen, and have milk and cookies, like religiously as a habit. Half the time, Michael, I'd be halfway down the hallway before I even knew I was awake. It was
Hmm.
walking. Okay. That's how habitual it was. Well, about 7 or 8 years ago, I decided this is, not a habit for an older man to be continuing unless he wants to have arteriosclerosis, right? So I decided that I needed to create some leverage, some friction from continuing to do this. So
Yeah.
in my coaching program, we break up into teams of three, and we work on goals and action items for these 6 month windows. Well, in this particular year, we had an odd number of people. So somebody needed to fill in. So I volunteered to fill in. And my health goal was to eat healthier and to reduce sugar significantly. So I made a declaration to my 30 some odd coaching clients at that retreat that for the next 6 months, I'm not going to have one single night where I wake up between midnight and 1 in the morning. If I find myself walking down the hallway, I'm going to stop, turn around, and go back to bed. And then I'm not going to have milk and cookies. And that was massive leverage for me, just like I'm suggesting to you, because I didn't want to look good in the eyes of my clients. I mean, I'm their coach. I mean, like
Right.
I teach this stuff, I coach
Yeah.
this. What am I gonna do? Fail? But sometimes it's very powerful to put it out there and to make the declaration, because now you get to leverage fear as your friend and your ally to breaking bad habits. Which, newsflash, I haven't gotten up in 8 years now and had milk and cookies between midnight
Awesome.
and 2 in the morning, because that builds
Awesome.
a habit. So something like that, I think, could
Yeah.
be very powerful for you in your connection with your two little girls and your wife.
I love that. That's good. And like you said, time is fleeting. You blink and, Amelia is now 3. I remember I was holding her just the other day, looking at her. So sitting her down to bed, read the story, kind of having that time to cuddle, and just kind of looked her right in the eye. It's like, I remember 3 years ago today, I was just waiting for you. Right. Her birthday is tomorrow. She's going to turn 3 on July 1. And just, it almost, I got emotional. I'm looking at her. I'm like, oh my gosh, where does it all go? And now she's talking, she's running, she's playing, she wants to dress herself, right? She's just, she was just a baby. And yeah, man, yeah, it's funny because it all just goes by so fast. No, I
So
like that.
one other suggestion that I might have, and happy birthday to Amelia tomorrow.
Thank you.
Um, it was 3 years ago tomorrow that your wife gave you your first child.
Yeah.
So maybe sending her some flowers when you get off this session together,
Oh, 100%. Yeah.
sending them to her tomorrow and saying, thank you for bringing our daughter into our lives and for going through the process of giving birth to her, might be a nice way
Absolutely.
for you to connect with your wife as well.
Love that. Yeah, absolutely. Love that. That's huge. Yeah. Thank you.
Brother, it was a pleasure to spend time with you. I hope that you were able to find some value in this time. Thanks for letting me coach you. I know that we've never done this before, and it was really fun for me.
Yeah, it was fun for me as well. Insightful. I'm thankful for you. As I mentioned, this is probably the 30th time I said this on this call. But thank you for everything that you do and continue to do. And thank you for being you, Tim. Seriously.
You're welcome, brother. Thanks very much. And thank you everyone for listening. Hopefully you got some value from this time. Bye-bye.